you've highlighted is just the immense amount of digital data that's available, surely at Geo and in India. And this leads to one of the things that I want to announce with you. As you know, in order to lead in artificial intelligence, you need to have AI model technology that India has. You need to have data, massive quantities of data. And using the last thing you need is AI infrastructure. And we're announcing that Reliance and Nvidia are partnering to build AI infrastructure here in India.
Absolutely.
And then the thing that I will say is that in order ultimately to create that into a flywheel is one of the great advantages that India has, which is a very large population of users. And so now you have the fundamental ingredients, AI, data, and AI infrastructure, and you have a large population of users that ultimately creates your AI flywheel. The thing that I really love, and when I met Modi ji, the first time he asked me to meet his cabinet was this has got to be about 6 years ago. He asked me to address his cabinet about artificial intelligence. And I was so surprised. It was literally the first time any government leader, any national leaders asked me to address his cabinet on this particular topic. It was long before anybody was talking about artificial intelligence. And my last visit with him, he said this, and it was really quite profound. He said, I was explaining to him the concept of AI infrastructure and why it's essential for every nation to have their own AI infrastructure, like their own communication, their internet infrastructure, their roads, like energy, of course, and of course, intelligence should be part of your infrastructure, and the manufacturing of intelligence should be part of your infrastructure. And he said this, he said, it makes complete sense that India should manufacture its own AI, manufacture your own AI. You should not outsource, you should not export data to import intelligence. That India should not export data to import intelligence. And he said,
absolutely.
And Modi ji said, it's like India should not just export flour to import bread. We should add value to the data ourselves. And the partnership that we have is to start that journey, to build the underlying infrastructure so that India could have your own infrastructure. You surely have your own computer science expertise. And you also have your data. You have a giant population of users
Nvidia is expanding its presence in a significant growth area by forming a number of alliances with Indian companies to implement its AI processors and technology. According to Jensen Huang, CEO of the U.S. chip designer, the company has teamed up with Reliance, the most valuable company in India, to develop AI application infrastructure in India. He added that Tech Mahindra would create Indus 2.0, a Hindi AI model, using Nvidia's chips and software. By the end of the year, Yata Data Services and Tata Communications, two infrastructure providers, also want to purchase and utilize tens of thousands of Nvidia H100 chips. At the same time that Indian IT service providers are racing to develop AI capabilities, Huang was giving a presentation at the company's ongoing AI Summit event in Mumbai. Nvidia's software has been used by Infosys, Wipro, and other IT firms to create unique AI solutions for business customers. In the past, software was exported from India. According to Huang, India will export artificial intelligence in the future. Tata Consultancy Services claim to have educated 50,000 employees as AI associates, while Wipro claimed to have trained 225,000 employees on NVIDIA's AI platforms. According to the firm, NVIDIA's developer program now has over 500,000 developers in India. NVIDIA's technology will also be used by software company Zoho and Indian e-commerce company Flipkart to create extensive Hindi language models. In order to create extensive language models for Indian languages, the collaborations rely upon Nvidia's previous ties with Reliance Industries. Plans for AI cloud infrastructure and staff training were also part of that agreement. Nvidia's technology is also being used by a few Indian startups. According to Corover.ai, since its inception, its chatbot for Indian Railways has handled over 10 billion customer contacts and processes 150,000 requests daily in several languages. As it vies with rivals AMD and Intel for India's expanding AI chip market, Nvidia has trained over 100,000 Indian AI developers. If you want to keep up with Nvidia's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
Nvidia coming off another record high as Wall Street looks ahead to the company's earnings report next month. CEO Jensen Huang saying that a design flaw with the company's latest Blackwell AI chips has been fixed. The company unveiling the chips in March and expected to ship them in the second quarter, but they were delayed. You're looking at losses here of just about 2.5%, almost 3%. Huang now also commenting on the state of AI investment, saying that the European Union is lagging far behind the U.S. and China and needs to accelerate its progress. We have seen a number of the larger tech companies come out and be very vocal just in terms of where the EU stands versus the rest of the world, and the concern there just in terms of what that would do to stifle innovation and potential growth here down the line. But again, when it comes to these Blackwell chips, what we are learning in this report very much front and center here today, because there has been so much focus on the delayed Blackwell chips. They're now expected to ship in the fourth quarter. The resolution of the design flaw, they've resumed production, then that could ultimately potentially positively impact NVIDIA's customers, including those hyperscalers that we talked about when it comes to Google, when it comes to Amazon, and then obviously Meta as well, Microsoft too. So again, just going forward, just the domino effect of what this could ultimately mean for other larger players within the space.
And it's great you bring up the hyperscalers, but also the chip names, including TSMC, which we just talked about. There's been some conflicting reports about whether or not the Blackwell flaw caused any ratcheting up of tensions between TSMC and Nvidia. Jensen Huang pouring cold water on that idea, saying that TSMC helped them recover the yield difficulty and resume manufacturing of Blackwell at an incredible pace moving forward. And this mirrors kind of what I heard from Jensen Huang at the Goldman Tech Conference earlier this year, that these chips are still expected to ship in the fourth quarter, saying that the flaw in the design of the Blackwell chip was completely NVIDIA's fault, not the fault of any other partners in the space, and that it is still on track for that fourth quarter shipment. So something that we will continue to follow, and certainly is going to come up in NVIDIA's earnings, which are always way too late. It makes it lots of anticipation throughout the quarter as we wait for those earnings.
Even though Nvidia has been riding the AI wave, here are 4 reasons why, despite its impressive success, the stock still seems like a good investment today. 1. AI research and development is still in its early stages. Despite the enormous demand for its graphics processing units, GPUs, to support the development of AI infrastructure, NVIDIA's primary argument is that the AI rollout is still in its early stages of what is anticipated to be a lengthy process. To assist in training large language models, LLMs, and running AI inference, major tech corporations and well-funded AI startups, including OpenAI and Elon Musk's xAI, have been investing heavily in the construction of AI-focused data centers. Major IT businesses' growing capital expenditure, CapEx budgets, and management's remarks regarding future investment are examples of this. For instance, Oracle has stated that it sees no end in sight for spending on AI infrastructure over the next 5 to 10 years, while Alphabet and Meta Platforms have both stated that the main danger with their AI spending is not overspending but underinvesting. In the meantime, Microsoft's finance leases that have been contracted out but not yet started, mostly for AI data centers, have more than tripled to an astounding $108.4 billion in the last 12 months. As AI models develop and become more complex, they require exponentially more processing power to train. For instance, xAI's Grok 3 required 5 times as many GPUs to train as Grok 2, while Alphabet has stated that their Llama 4 LLM will require up to 10 times the processing power of its previous iteration. All of this suggests that there is a growing need for GPUs, a market in which Nvidia has established itself as the industry leader. 2. The market share leader is Nvidia. Although it appears that there will always be a demand for GPUs, Nvidia is not the only company capable of producing AI devices. While some businesses, like Broadcom, assist businesses in creating customized AI chips for their unique requirements, Advanced Micro Devices also manufactures GPUs. But with a market share of more than 80%, Nvidia has emerged as the industry leader. This is a result of both its robust chip lineup and the broad market niche it has established with its TUDA software. Nvidia developed its TUDA platform long before the AI craze to assist developers in programming its GPUs with free software. Consequently, TUDA emerged as the industry standard tool that developers use to learn how to program these devices. It has made it more difficult for other businesses to enter the market and gain a significant portion of it because it is the de facto industry standard. Simultaneously, Nvidia has accelerated its chip development from a 2-year cycle to a 1-year cycle. Because it will constantly be able to provide new and superior designs, this should help it maintain its technological lead and provide it pricing power. In 2026, the business plans to launch new chips based on its Rubin design, but it only recently started shipping chips based on its Blackwell architecture. There doesn't seem to be a significant risk that Nvidia will lose any significant market share at this time. 3. The valuation of Nvidia is appealing. Given the potential ahead, Nvidia's stock is still attractively positioned despite its recent massive stock price increase. According to expert expectations for 2025, it trades at a price/earnings to growth (PEG) ratio of just over 0.9 and a forward price to earnings P/E ratio of over 35. Growth stocks typically have PEGs considerably above 1, and a PEG below 1 is typically considered inexpensive. As a result, Nvidia still has a large moat and a lot of AI potential. It also trades at a very fair price. 4. Even the biggest businesses in the world can do better. Investors may be concerned about Nvidia's potential growth given its market valuation of more than $3 trillion. Being among the biggest corporations in the world does not preclude its stock from outperforming during the ensuing 10 years. With a market valuation of roughly $500 million at the beginning of 2014, Apple, for instance, was the biggest corporation in the world 10 years ago. With a market valuation of more than $3.5 trillion, it remains the biggest firm in the world a little more than 10 years later. In 10 years, that is a 7-fold growth. Another example is that, with a market valuation of little less than $268.56 billion at the beginning of 2010, Microsoft was the biggest tech business. With a market valuation of $1.2 trillion, it was the second largest tech business 10 years later, in 2020, an almost 4.5x increase. Even with its current enormous size, Nvidia's stock could rise sharply in the next years, particularly if the correct tech trend propels its expansion. So what does this really mean for Nvidia's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Right now, right? I mean, the move back up in yields and the toll it's taking on stocks?
It's the Trump trade, it's the backup in rates, and it's earnings season. So it's all about who just reported last, what that means, and what narrative we're going to go with. But you're right. And the other thing is, we've had a heck of a rally here, so it's time for a little bit of give back.
Why is it time for give back? I mean, isn't this rally based on the fact that the economy's good and the Fed's cutting, and you can say the move in yields is in part for the reasons you suggested, the reflation trade, but it's also because, look, the economy's good.
Scott, that's all fair, right? And I think that all works longer term, but in the short term, typically what we see heading into a presidential election cycle is a bit of a risk-off, a bit of a sell-off, and we've really done the opposite, right? So after you see that rally, we've seen that rally before, and so I think we've gotten ahead of ourselves. And with rates backing up, I think people are just getting a little bit nervous, and the odds of Trump winning appear to be going up. The odds of a sweep appear to be going up, and people are worried about the fiscal side. I'm not sure that's the right thing to do, but in the short term, a little bit of give back makes sense.
Apple is still in the lead, at least for the time being, even if Nvidia has already surpassed Microsoft in terms of market capitalization weighted on the Nasdaq. Encouraged by new features for the iPhone and iPad mini, Apple stock is hoping to break out to a record high and increase its market share. However, as it teases a new buy point and all-time high of its own, Nvidia hopes to usurp that crown. As it prepares for a possible new breakout, Microsoft, another Magnificent Seven stock that experts predict might surpass Nvidia in 2025, may potentially pull off a market cap coup. As of Wednesday's close, Apple's market capitalization, which stands at approximately $3.51 trillion, represents 9.9% of the Nasdaq, with a market valuation of $3.42 trillion, or 9.7% of the Nasdaq. Nvidia is still right behind it. Third position goes to Microsoft, which has a $3.16 trillion market value and represents 8.7% of the index. On an intraday basis, the market cap competition is becoming even more fierce Thursday, with Apple currently valued at $3.49 trillion compared to Nvidia's $3.43. The big three equities are far superior to the other Magnificent Seven stocks. Amazon.com and Alphabet are almost tied for fourth place with a weighting of 5.5% and 5.7%, respectively. Meta Platforms is weighted at 4%. However, that is more than twice as much as Tesla's 1.9% weighting. While Nvidia doesn't report until November 20 and Tesla surprised investors with a late Wednesday earnings boost, Apple will join the other Mag 7 companies for a barrage of reporting the next week. Amazon and Apple both report on Halloween, the same day that Apple recently announced the new iPad mini. The king of Cupertino is predicted by analysts to generate $94.4 billion in revenue, representing a 5% increase from the previous year. It is anticipated that earnings for the September quarter would rise by 9% to $1.59 per share. Wall Street predicts 9% earnings growth to $6.71 per share for the entire year. The stock keeps indicating demand as Apple receives a positive iPhone sales report from China. Apple's stock receives a B accumulation/distribution rating with a strong 94 composite rating. However, its up/down volatile ratio has dropped to 1.0, which is neutral. Alphabet will release its quarterly results on October 29 before Apple and Amazon report on October 31. Microsoft and Meta will follow on October 30. Apple is still working on an early-stage consolidation pattern as it is trading well above its 50-day line and holding onto support at its 21-day exponential moving average. This is the buy point, 237.23. As Apple stock created the new base, the relative strength line shifted primarily sideways. As the possible breakout draws closer, watch for the RS line to trend higher. Nvidia is attempting to maintain the 140.74 entry it cleared on October 21 in an attempt to unseat Apple as the market cap leader. Both its 21-day and 50-day lines are still above it. As it works on a new basis ahead of earnings, Microsoft has regained its 50-day benchmark.